All right, traders, it is the 18th of October, 2017. We are looking at a weekly candlestick chart here of Western Digital Corp. It trades on the NASDAQ exchange, and I found it doing a screen looking for shorts. And although I thought originally I was seeing some distribution, I think there's some things to point out that suggest that this is a continuation pattern and that there may be a good breakout play. So what do we have? We have one. It's very interesting because we have a very well-defined, uh, point of accumulation. So there's some distribution, a markdown, and then some accumulation. We have a preliminary support, selling climax, automatic reaction, secondary test. There's our stopping action. That's phase A. Secondary test again with a shakeout. We're going to call that phase B. We're still in phase B. Phase B is the accumulation of supply. We can continue here to see that supply is expanding, yet we're not really making larger or lower lows. So we're seeing shortening of the down thrusts, just like we're seeing shortening of the up thrust in the current market. And then we actually rally higher, and then we back test again. So I'm going to call that our shakeout again. That's our secondary test here in phase C. And then we kind of break out above this key 40-week moving average. This is the 200-day simple moving average. I'm going to call that a minor sign of strength. I'm going to call it a minor sign of strength because we quite haven't traded above this pivot here where the preliminary support and automatic reaction is. We're nearing it, but it's not quite there. So we'll call that a minor sign of strength. And then we fade back down, and it looks like we're just in the process of confirming this prior level of resistance here, support. And then now we break away on expanding volume with increased ease, and it's through this important moving average. That's our major sign. That's a jump across the creek, and then that achieves the major sign of strength. And then we back up and we test this consolidation range. Now we're in phase D, and we're again we're trading above this pivot that's here. This is the point that we try to catch here to get longs and to speculate long positions and build positions so that we can not tie up our money and participate in the actual markup. So Western Digital, in retrospect, transitioned from accumulation to the markup very well, and very profitable trade. So now we had the introduction of supply here. This is preliminary supply. Here's our buying climax, automatic reaction, secondary test. There's our stopping action. Following this stopping action, we started to see some consolidation. This forms a diamond top. Diamond top is kind of a misnomer because it implies by its name that this is a topping formation. However, from a statistical standpoint, that's not as probable. It's somewhere between 10 and 20%. So I'm not just going to throw money on the downside because of the name. So we had the stopping action. The stopping action occurred after we achieved the bullish price target here. So the bullish objectives were between $81 actually and $90. So we built enough cause and we achieved that. So in order for it to continue, we'd have to build some more cause. So if you are taking a measured move based on the diamond top, you would essentially take a move, or you would measure from the trough to the apex, and that would give you a price projection. So the same distance that you'd have from the bottom and top of the actual pattern would give you an extension for the breakout to the high side or breakout to the downside. Now, if we're using a point and figure methodology for price projections, I used a one box reversal, 2 and 3 box box size count, so $2 and $3. And this gave me the most consistent measured move or price projection that I was able to reproduce here. Was a $30 cause. So that tells me that if we have a breakout to the upside, I would expect a $30 run, which is a pretty good upside given that it's trading currently at $85. And if it breaks down, we're looking at a pullback here to 50 bucks, which would be back where this accumulation was. So just to kind of keep things simple, you're bullish above the 200-day simple moving average or the 40-week moving average, and you're bearish below. Again, I got this as I was looking for a screen for stocks trading below the 50-day simple moving average, but above the 200-day simple moving average. Now, some things or some reasons why I think that this is a bullish continuation pattern is that we, despite kind of pulling back, it has maintained, it has essentially been above or has not retraced greater than 50%. So it's a nice strong stock that is relatively kind of overbought and just kind of trading laterally. Additionally, The area that it chose to consolidate is above this key area. And why is this important? Because this 2015, 14, 15 topping action here, when it lost this level of support and retested it, it confirmed this level of support as resistance. And now it has recaptured that. I think that's bullish technical strength. So we can easily identify that this is a level of resistance above if it's trading below it. And if you're above it, we can confirm this level of support. And we can see currently that it's trading above this key level, which means that it's holding support defined by that key level and the 200-day simple moving average. Additionally, if we're going to call this the pivot, the preliminary supply, we can also see that prices are staying above this key pivot here. Even when we had a sign of weakness, a breakdown of this current trading range, creating a lower low, there's our sign of weakness, and we rally higher, our last point of supply. When we went to break down again, we're still above this pivot. And additionally, we didn't have any downward follow-through, so I've labeled that a changing character. This may be some distribution transition into reaccumulation. And if we were to break out higher again, that would give us a $30 cause. There's really nothing kind of jumping out at me as far as volume. I might just say that we did have a sign of weakness that occurred with some supply. So I still, at this time, would say that this is some distribution. We rally higher with decent volume. And then again, there's some down days here with some volume, but nothing there is jumping out at me as gross supply. I guess I would add that there currently appears to be enough demand that it would suggest that prices would remain in this trend range. In other words, demand hasn't contracted like you see over here in late 2014-15. If there's the absence of demand, I would be a little bit more bearish. I will say that it looks like the current trading range is trading below this level of support. So it looks like we've lost this level of support, and now we're trading below it. Again, I just would remind those of if we're trading above the 200-day, trading above this level here, the pivot, and it just looks like a continuation pattern. If we attempt to apply the relative rotation graph here in a kind of linear aspect, we can see that it was downtrending, but it's starting to curl up as it looks like there's the potential that we're seeing some positive rotation into it. And it even looks like as the green line kind of comes up, that for the time being, it's a minor increase in the momentum. So if we do get a cross here of this 0 line, or this 100 mark, that would certainly be a bullish buy signal. And we'll see. So I actually like Western Digital despite finding it on a short screen. Maybe I should reanalyze my short screens, huh? But this is, again, Western Digital. The ticker is WDC. I hope you found that helpful. All right, traders, good luck.